Morning, welcome to the Phoenix Blue update on Monday the 27th of March, presented this morning by Tom Colley. After a relatively quiet week last week, we had one big event that happened really almost as the markets were closing, or if not closed, on Friday. That was the failure of President Trump's healthcare policy to get through Congress. Let's just start with the news for today before we go on that. You'll see from that slide that the news is really all about that. The only red flag news we have today is the German IFO business climate at 9 a.m. this morning. So, Trump, healthcare. Why does this matter to us so much? Excuse me. It's not really about the bill itself. It is just that this is Trump's first major policy that he's been unsuccessful in gaining a majority even amongst his own supposed party. He didn't actually take it to the vote. He withdrew the bill before the vote was due on the basis that he knew he couldn't win. So the ratification or ramifications from that could be significant. We've been taking advantage since the election of Trump for what's being called, certainly in the stock markets, the Trump trade. This is optimism based on his fiscal plans in terms of reduced taxation and also infrastructure spending and things like that. They were seen very, very positively by the markets in driving growth and in turn driving interest rates from the Fed. That the vote, or this lack of a vote, Trump's inability to get a policy through on healthcare, certainly raises concerns that his other policies have the potential to struggle also. So what have we seen in the markets from this? Well, this is the dollar index. We started with a gap down this morning, and we can see at the time this slide's taken, we've got quite a bearish picture already today. We've been watching this key 99.15 level with a view to correlating that with markets, particularly the euro, for a turn in those markets. Obviously, we'll need a reversal in direction today for that situation to still be in play. And we're now at risk of this head and shoulders formation playing out with the neckline broken at the moment. If we get that daily close below, certainly then we have the potential, although we really probably need to break through this lower 98.90 level and also this trend line for absolute confirmation. But if those are broken, then for the head and shoulders to play out, we normally look for this dimension to be replicated to the downside, and that would bring it really price on the dollar back to the point before anybody suspected Trump might win the election on the night of the actual election. Over on the yen, well, we've seen another bearish move down here from the yen. We had on Friday, we had a brief recovery, but we can see we've got this downward movement. Remember, this is yen strength playing out. So against a weak dollar, we've yen strength there, and with levels around the 109.15, 109.75 levels. There's a zone through here in confluence with the bottom of this channel, which we will be looking at. We'll also be looking to correlate that with the dollar index and the euro if we get a potential turn at that point. Over on the euro, obviously similar to the dollar index, but in the reverse, we've got the inverse head and shoulders here. We've got what is the neckline through here at 108.2425. That's been broken this morning. The current bar is through that. We've got this downward trend line, and similar to the dollar index, if we see a break above that level, a pullback in and continuation, we'd have targets similarly to the top of the election spike here, being 1-to-1 in terms of the distance between the head and the neckline, and the neckline and subsequently the target on that inverse head and shoulders. We do have a commitment of traders extreme currently on the euro to the short side there, but that dates to data collected Tuesday last week, so doesn't take account of the vote on Friday. So this is a market that we will be cautious over. We'll potentially be looking for a pullback now back below this 824, 825 level here before thinking about any short trades. There is a great deal of uncertainty. As I said, the news came through as the markets were closing in the US on Friday. It may be a wise move to wait for the US markets to open this afternoon before seeing how many of these potential trades play out. Over on the Aussie, a couple of nice opportunities here now which aren't going to be directly affected by that. We've clearly got a box range through here. Be looking, as you see, I've already got orders in place, looking to trade both the top and the bottom of this depending on exactly what happens. So, as I said, because we are a substantial distance away from either of those two targets, that will allow the Trump vote scenario to play out before those levels come into place. They're clear levels. They've been in existence really through to what would look in the middle of 2016 here. The support resistance has been testing these levels. So they remain valid levels, so we will be looking to trade those this week. Gold, well, 1250 level was a very significant level through here. Clearly what happened on Friday, we've got a risk-off scenario, money running to the safe havens in terms of yen, gold, and then if we look at the S&P 500, we'll see a break below a level we were watching here. We were looking at this bull flag here in conjunction with this upward channel. The channel's been broken, the bull flag's been broken, and we have the potential for more downside in this market. It's not a market I'm looking to short at the moment. I potentially will give us opportunities. 22.75 looks an interesting level down here. Does give us better potential buying opportunities, gives the trend a break. Some pullback and an opportunity for the long side, but it would take something more substantial to happen for me to be looking at short side on the stocks at this moment in time. Bearing in mind, this is the election day, this is the Trump trade. Okay, we've had some disappointing news relating to Trump and his policies, but I don't think that changes the picture as a whole with potentially looking at a short-term pullback. Okay, that's the picture for today then. Be cautious, trade cautiously. If you're looking at intraday trades, I would suggest that you stay away from anything that's correlated to the dollar till we see this play out. If you like the video you've been watching, these come out every day before 9 o'clock every trading day, that is. There'll be a link coming up so you can subscribe to the channel so you get an email every morning. We are very close to confirming the next free trading event, which looks like it's going to be now April the 18th. That's Tuesday the 18th in the afternoon in London. If you're interested in that event, we will confirm it absolutely as soon as possible. But in the meantime, if you send us an email through the website with the link coming up in a moment, through the contacts page there, as soon as that information is available, we can send you all the joining instructions there. Okay guys, that's it for today. Caution there over the Trump vote. Let's hope that that settles down through the day and we can come back to you with some more positive opportunities to trade in the morning. Thank you and goodbye.